This is John. I'm the Senior Strategist here at FFR Trading. I wanted to give you a brief overview of who we are and what we do, and then introduce you to some of our current trading strategies. Here at FFR Trading, we've been evaluating trading strategies for 15 years. We act as a due diligence firm because you can go out on the internet and you can find thousands of traders, making all sorts of claims about profits, but how do you know what is real? So here at FFR Trading, we sift through that vast myriad of strategies out there to find out what is actually working in the markets. Once we establish that a trading strategy and that trader is real and those results are real, we then are able to offer those to the small retail trader and investor, those people that normally wouldn't have access to institutional level traders. But here at FFR Trading, we represent a number of different traders who are trading many different strategies, over 20 strategies in all the different markets, whether it be futures or forex, stocks, options, and commodities. And each of the traders that we represent has over 20 plus years of market experience. So these are institutional level traders that may have been former hedge fund traders, commodity trading advisors, institutional proprietary traders, and so on. Now, before any trader is allowed to trade for our clients, they have to go through an 8-step certification process. Let me quickly go over the steps that are involved in that process. Step number 1, we choose to work with traders and investors who have been referred to us by a trusted third party. Well, what does that mean? Well, typically it's maybe a brokerage firm or another institution or bank. Step number 2 is we choose to work with traders who are licensed or have been licensed. And then step number 3 is we put them through an application process and a thorough interview. Step number 4 is we get the rules for the strategy, make sure it's viable in the current markets. Now, step number 5, now it says having at least 10 years of actual trading experience, is actually 15 years now. All right, we're looking for a market veteran, someone who's been through all the ups and downs in the markets, the booms, the busts, and so on. Step number 6, we get a back test of the strategy. And then step number 7 is each trader must provide us with their real brokerage statements going back at least 3 to 5 years. If they can get through all that, step number 8, that final step, is we run the strategy on a live account. We make sure that it is performing as anticipated, the trades are executed properly before we ever release that strategy to our clients. So I think you'll agree that is quite a thorough process that each trader and strategy has to go through before they're allowed to trade for our clients. And this is why you can have confidence that you are working with a winner. The first program I want to introduce you to is our latest addition to our offerings, and that is the new Gemini Trade Service. Here is a performance summary, and this is based on a $7,500 account, which is the minimum account size recommended for this strategy, allocating no more than $1,000 per trade. And these results go from January of 2018 through June of 2021. And you can see during that period that $7,500 would become a net profit of $71,000, or return on capital after expenses of 712%. If we take a look at the annual average, we're averaging 204% over that 3.5-year period. And the monthly average, for those looking at monthly income, is just about $1,700 per month in profit on average. The win rate of 74%, quite high. But the beauty is the average winning trade is $522, whereas the average losing trade just $326. And that's what gives you this nice, smooth equity curve. All strategies have drawdown. So you can see we have some drawdown here, but a good trader and good strategy will come out of that drawdown and go on to new equity highs. We have some drawdown and new equity highs, some drawdown, new equity highs. Right? But this is a very, very smooth equity curve, and this is a service that trades options, puts and calls on stocks. And we're talking major companies like Microsoft, UPS, Home Depot, and so on. Very liquid companies, very liquid options. Right? And this is the kind of performance that our traders can achieve. Next up, we have our Target Zone Options program. Now, this strategy trades spreads, mainly credit and debit spreads, in the options market, options on stocks and ETFs. Now, these trades are based on a $10,000 account size, which is the minimum account size recommended for this strategy, allocating $1,000 per trade. These results go from January of 2017 through July of 2021. In that period, that $10,000, these are non-compounded numbers, turns into $92,000. That's a 929% return over the period. That equates to an annual average of 205% per year. If we're talking monthly average, it's averaging profits of about $1,700 per month per $10,000 account size. All right, the win rate here, 76% over that period. Again, the average winner, $692, with the average loser just $420. These are astounding results that normally the retail trader will never get to see. But because they can partner with us here at FFR Trading and have access to institutional level traders, they can achieve, and they are achieving, these kind of results. And finally, let me introduce you to our best performing program, and that's our Turtles Commodities program. Commodities are booming. We haven't seen moves in the commodities like this in 50 years. And there's been no better way to capture that volatility than through our Turtles Commodities program. If you're not familiar with the Turtles are one of the great trading stories of all time. Richard Dennis, who was a trader back in the 1970s, developed a strategy to trade the commodity markets. He borrowed $400 and he turned that $400 into $200 million over a 5-year period. Richard Dennis didn't believe that he was unique, though. He thought he could teach anybody to become a successful trader. And so he did an experiment. He invited people off the street to come and interview to become a trader. And he picked about 14 people for the initial class. He put them in a room for 2 weeks, taught them his strategy. At the end of the 2 weeks, gave them $1 million, and they started trading. And they turned that $1 million into hundreds of millions of dollars. They became known as the Turtle Traders because at the time, when he was talking with his partner and discussing whether this could be done, his partner said, "You're crazy. You were born with that gift. You can't teach somebody to do that." And Richard replied, "I think I could take one of these turtles here in this pond and turn him into a trader." So they called them the Turtle Traders. Well, Russell Sands, who developed our Turtles trading program here at FFR Trading, pictured here, was one of the original Turtle Traders, one of the original 14 that was in that class that Richard Dennis taught. Now, over the last 20 years, Russell Sands developed a team, and he worked with Jeff Davis, Dwayne Davis, and Steve Charpentier, who is the head trader for the Turtles Commodities program. So this team literally has decades of experience trading this strategy. Now, this Turtles Commodities strategy is called what's called a breakout strategy. So let's take a look at some of the trade academics, the performance statistics, and we'll take a look at some actual brokerage statements from our clients so you can see how they're doing in the program. The Turtles Commodities program will buy and sell a wide range, over 50 different commodity markets, such as energies and metals, and currency futures, interest rate futures, livestock, and so on. So this is stuff that people are familiar with. They're trading gold and oil, natural gas, gasoline, corn, wheat. And when one of these markets breaks out and starts to develop a trend, whether it be an uptrend, where it's moving higher, or a downtrend where prices are moving lower over time, the Turtles Commodities take advantage with their breakout strategy. Now, one of the big keys with all our programs is risk management. Each trader has risk management procedures in place to not only protect profits, but also protect downside risk. These programs all implement the old trading adage to cut your losses short, but let your winners run. And no program does that better than the Turtles Commodities program. Here are some example portfolios, depending on the account size. So if you're starting with between $15,000 to $25,000, the Turtles will start you off in 4 markets that would include bean oil, 5-year notes, natural gas, and sugar. As the account grows, let's say you're now in the $35,000 to $50,000 range, you'll be trading 9 markets. So they're going to be adding the Canadian dollar, crude oil, the euro, the Dow, gold, lean hogs, and sugar. All right, so as the account grows, you add more markets. That diversifies your portfolio between these different commodities and also gives you more opportunities for profits. Here is a commodities trading statement from one of our clients, Chet and Linda, that are in the Turtles Commodities program, and they're having the broker execute these trades for them automatically, so it's completely hands-free. And notice the statement date here of January of 2020. Okay, the way Dorman, who is the clearing firm, the clearing broker here, the way they do their statements is they show all the monthly activity first, and then at the bottom of the statement they show the account summary. You'll notice here under debit, this is kind of the left-hand column here. That's where you're going to see the commissions, the expenses, and the losses. On the right-hand side, you see the credits, and that's basically your profits and any credits to the account. So you can see first there was a credit, and this was on the sugar market for a little over $2,000 in the account. If you look at the 10-year note here, there was a debit of just over $1,000, so that would be a loss. Right, and so on. Here's page 2. A debit here about $1,800 on the 10-year note. We've got a $2,800 debit or loss on the S&P 500. $1,500 loss there on lumber. All right, so you can kind of go through and see here some of the profits here on the Canadian dollar and all the kind of different markets. Here's a credit of about $2,600 here in gold. All right, all the positions. Now here's the summary. So it shows us the beginning balance, and this is January again of 2020. So he started with about $38,000 here. Actually had a loss of about $9,400 for the month. So ended with about 26,000. But had open trade, see where it says open trade equity. So that means there were trades that were still open that haven't been closed yet that were worth another $28,000 in profit. So he started the period with $38,000 and the account value at market. In other words, if he liquidated everything and took everything out, he'd be liquidating about $52,000 for the entire account value. So just keep in mind, it basically started with $38,000 in January of 2020. Let's kind of fast forward here. Now we're through March. You see we're up now to May. All the transactions were June of 2020 now, July, August, September, October. Okay, into November of 2020. Again, you see all the trading activity. Now we're into April here of 2021. Here's May of this year, June, and June will be the last month here. So now look at Chet's beginning balance for June of 2021. So basically about 18 months later. The account that was at $38,000 has now a beginning balance of $338,000. Actually was down about $2,400 for the month of June. So his ending balance sitting at $335,000. But there's also open trade equity of $18,000. And so the account value at market, June of 2021, sitting at $354,514. That's a profit of 832% over that 18-month period. Where else do you find gains like that in the stock market? Now, Chet and Linda are not alone. Let's take a look at an account statement from Richard. Now, notice this statement is dated March 31st of 2021. This is my client Richard, and again, he clears through Dorman Trading. The monthly statement here, again, you can see your debits and your credits and all the activity for the month here. You can see a little bit of profit here on sugar, You've got about a $2,300 profit here on the Dow, $6,200 profit on lean hogs, a $3,800 profit here in E-mini gold, another $2,400 profit on crude. You've got some small losses here on another contract in crude, but a $5,200 profit in bean oil. What is bean oil? I don't know, but you can make money on it, and the turtles do. $1,100 profit here in the 5-year note. All right, so you can see all the debits and credits. Right, let's go down to the initial beginning balance for the month of March of this year was just under $50,000. The trading activity with closed profits of $20,778. So the account is now worth $70,447. But we're not done yet. We have open trade equity. That means there are trades that are still open that haven't been closed yet, worth $11,747. So he began the month with just under $50,000, and he's ending the month with a market value of $82,194. Right, we're talking 1 month, but let's take a look at the next month. Let's take a look at April here. So here's the month, next month here of April, ending statement here. And again, this is still Richard, his account at Dorman, and you see some of the activity here. $4,700 profit here in the mini Dow, $2,100 profit here in lean hogs, corn, $400 profit there in corn. Now look at this one. You've heard the story about lumber and how lumber just went astronomical. We have a profit here of $37,455 on one contract of lumber. Unbelievable. So let's take a look at the bottom line. So remember, Richard ended the month with $70,000 in closed profit. So he starts the month of April with that $70,447. They added another $40,577 in profit for the month. That gives his ending balance of $111,000 in closed profit. But we're not done yet. He's got futures open trade equity worth another $45,989. So his account at market value, so if he liquidated everything and took his money and went home, it would be worth $157,000. So remember, he started with just under $50,000 and he turned it into over $150,000 in 2 months. Where else can you get those kind of returns? That's a 214% return in 2 months. That's the kind of profits that we're seeing in the commodities markets. If you'd like to schedule an online presentation with me where we can go over your goals and what you're trying to accomplish and find out which programs might be suitable for you, contact me directly. Either email johnm@ffrtrading.com or direct phone at 832-404-2540, and I can go over those programs with you in detail. Thanks for watching this presentation of FFR Trading.